What's up, guys? Your agent Tyler Wayrung here, and today I'm going to talk to you guys about another investment I made. And I'm going to pull all the covers out behind the scenes to show you guys all the details. But this is an investment that I made with the one and only Grant Cardone. If you're not familiar with Grant, he is a self-made billionaire in the real estate industry, also big into the sales and business side of things, best-selling author. I wrote the book 10X. That's probably his most popular book. But he's made his fortune primarily in the real estate market and then kind of has spread from there. So with that, let's go ahead and jump over. I'll share my screen and we'll dig in. All right, so I actually invested in Grant Cardone's fund back in 2019. And the reason I did that is this was the time when I've just bought a couple rentals and I really had used up all my capital. It was really before I started going heavy into the BRRRR model. I had a decent chunk of change, but not enough to put another down payment down on a property. I was also considering syndicating my own deals in the future and wanted to see what it was like to be on the other side of that. If you're not familiar with the syndication model or raising money or pooling money together to buy real estate, this is exactly what a syndication is and is what the fund that I put money into with Grant Cardone's company is. Another big factor here, if you are familiar with syndications at all, they typically require you to be an accredited investor or a sophisticated investor. 90% of the time you have to be accredited, which I think I'm getting this right, but I think you have to have a net worth of $1 million minus your actual home equity and your personal residence, or you have to make, I think, like $200,000 a year for the previous 3 years. So at the time, I didn't meet either one of those requirements, so I really couldn't put money into any accredited funds. So what Grant has done is he opened a real estate fund that was open to unaccredited investors. So unaccredited investors are people just like your regular Joe. You know, everybody that's not a high net worth individual is essentially an unaccredited investor. And these individuals, from the SEC's perspective, you have to have a lot more stringent guidelines on these investments. Essentially, they take away a lot of the risky investments so that grandma doesn't put her whole life savings into a very risky fund. So there is a good reason behind this, but I know that gets very technical. But all that to say, this fund with Grant was pretty much open to the public, so it allowed a regular Joe like me to just jump in. Another portion with syndications that you'll usually find is they usually have a high minimum investment. In most cases, it's a minimum of $100,000 investment. This keeps a lot of the small fish out of the pond as well. But for Grant Cardone's investment into Fund 5, which is what I invested into, the minimum investment was $5,000. So for all of those reasons, I wanted to get the experience that a lot of these other investors had access to at a much lower level. So I decided to invest $5,000 into Grant Cardone's fund. He's continued to open up additional funds. So I was in Fund 5, and you'll see that as we look over here now. So this is Cardone Capital's dashboard that you see when you first log in. That gives you a lot of high-level information. They actually just updated this, and it's actually much more user-friendly. Very nice dashboard, I'll say, now that I've had experience to several others. So essentially, at a high level, these are your distributions per year. So 2019, 2020, and 2021, you'll see roughly around $200 distributions for each of those years. You can look at this in lots of different ways, look at it on a monthly basis, etc. It shows what current investments that I'm actually invested in. As you can see here, I invested $5,000 into Fund 5, like I mentioned before. The cool part here also shows you which assets are rolled up into that Fund 5 and where are they geographically. So these are a map of the assets that I've invested in. So essentially, Grant has taken $5,000 from probably 10,000 different people, put it all in one pool of money along with some of his money as well, and went out and bought these A-class properties. So one of the things about this fund that's also different from a lot of other syndications, most syndications do the BRRRR model on steroids. So they'll go out and buy a distressed asset, usually in the 70 to 300 unit apartment complex that's run down. They'll put it together, they'll pull capital together, buy it, rehab it, and over a 5 to 7 year hold will typically refinance on a much lower cap rate now that they've improved the property, and they sell it and everybody gets a piece of the pie and usually get cash flow distributions along the way. Grant's is almost the opposite model where he's pulling together these assets, but he's buying very exclusive A-class properties that most people really don't have access to. These are properties that typically go to hedge funds and these big, humongous buyers on the market, because Grant has access to very great capital sources, things like insurance companies and bonds are lending him money in the very low 2s and 3%. So he's able to buy these very luxurious buildings, and I'll show you guys some of these here in just a minute. But to get back to the model, he gives you very low cash flow up front because you're buying these very efficient assets already that are already producing cash flow, but you're paying a premium for them. But his theory is over time, these are the assets that are going to appreciate the fastest. With that, let's jump in here. Let's look quick at a couple of these assets. He gives you the actual address here. I'm going to just zoom in. So we got a building in Houston, one over here in Panama City Beach. Where'd we go here? One down in Naples. I hope that didn't get hit by the hurricane. We haven't actually heard that yet. 10X Living at Naples. And we got two over here, more on the Atlantic side. 10X Living at Sawgrass. And over here in Delray Beach. So as you guys can see from these pictures, these are different funds. Let me get into Fund 5 so I don't misconstrue any information here. But as you'll see here, very nice looking building. So here's the one at Panama City Beach, Delray. Let's look at just a couple of photos here. Not your run-of-the-mill apartment complex that you're putting folks into. These are very high dollar, very top-tier tenant class that you're investing in. But again, you're paying for that by banking on the appreciation of these assets and not getting a ton in cash flow, as you'll see. This just quickly show you here all the different ones. This one looks pretty sick as well. All right, so let's get back out of here. Let's take a look at the monthly distributions on $5,000 just this year in 2022. So these are monthly distributions of cash flow, and I'm making a whopping $16.67 per month. So we did bump to $18.75 throughout, starting in March, and it looks like we just got another bump here at $19.79 in October. So as you can see here, not a great play if you're looking for early financial freedom. These are very hard to stack. You'd have to put in a ton of money here at these returns in order to make this really be material. $18 to me, it's really, I spend that at McDonald's on my kids, to be honest. But I did want to talk to you a little bit about the overall performance, and you'll see this is annualized cash on cash return. So this is the cash flow piece. The target for this fund, and full disclosure, he did just put these targets out there ahead of time. So, it's not just a complaint from me that it's not high cash flow. I knew that going in. So, give credit where credit's due. It's at a target 6% cash on cash. Again, not very high. And then 15% IRR, which if you're not familiar with how syndications are valued, IRR essentially what's the total return over the total time frame that I had this money invested. It does include both the cash flow and the appreciation that you'll receive on the backside. So this is kind of the number you want to look at. This is what you should estimate to receive on a yearly basis. This is annualized. So this is saying when we exit this fund, we expect to make up a good portion of this on the back end that'll make up for this low 6% target on the front end. And as you can see here, this is where we are today. We're well under the target of 6% at 4.27, but based on something that he's coming up with, we are projecting this to be an 18.8% cash or IRR rather at the very end here. The last thing I'll leave you with here, and that I didn't really realize as going into a syndication, is you also, on most syndications, they'll do what's called a cost segregation study to reduce the investor's tax liability as they're making this investment. So I'll show you quickly here. Keep me logged on. This is my K1, which is the return you get as an investor. And you'll see here, I got to claim a negative $2,900 on my year one because they accelerated that depreciation that you normally get as a real estate investor. They accelerate a lot of that to the very front end because they don't envision themselves holding this for the full term. So they try to take as much of that up front as they can. So I invested $5,000. I got to write off almost $3,000. That is a huge benefit, especially if you're one that makes a lot of active income and you need something to offset that. So as you can see, that was 2019. 2020, keep me logged in, please. I got a big whopping $85 off. And I believe the same here in 2021. So just keep that in mind as you are looking into syndications. So am I happy with this investment overall? I guess I can say I'm not, overly confident one way or the other. It's $5,000. I didn't expect to make a killing or expect for this to make me rich, but it kind of did give me a good experience on, what kind of updates people get, what the experience on the portals look like, so that if I do decide to do this one day, I have a good feeling of what it feels like to be on the other side of the table. But we do see lots of videos out there talking about Cardone Capital being a scam. I wouldn't call it that. All of this is governed by the SEC, and they continue to roll out additional funds. In fact, there's one new offering here. The SEC would have absolutely shut him down if he was running a scam. So I wouldn't say that. I have to respect Grant for everything that he's built and what he continues to build. He is a little overly bullish on a lot of areas, but it's hard to argue with a self-made billionaire who's done it all in this space. So I hope you guys got some value out of today's video. Free ways to support the channel are just hitting that like button or sharing with someone else who might enjoy something like this. If you want more information on investments that I've made, check out this video over here where I invested with the Brandon Turner of Bigger Pockets and everything that he's going on in his company, Open Door Capital. Well, with that, guys, I'm Tyler Wayrung, and we'll catch you next time.